It's a chilly autumn morning in New Haven, 1985. David Swensen, new chief investment officer at Yale, stares down a seemingly impossible task: how to turn a modest endowment into a financial powerhouse. Everyone else plays it safe, chasing Wall Street fads, but Swensen senses there's a secret formula hidden in plain sight. What if the traditional wisdom, buying stocks and bonds, misses the bigger picture? What if true success demands rewriting the rules altogether? Most institutions chase hot trends, but Swensen flips the script. Instead of following crowds off cliffs, he crafts a portfolio built to last, bold, diverse, and unafraid to swim upstream. When Swensen arrived, Yale was stuck in the standard mix, mostly domestic stocks and bonds. He ignored Wall Street's buzz and expanded into private equity, real estate, natural resources, and hedge funds. This wasn't guesswork, it was a strategic rebellion against the status quo that, over decades, generated an average annual return of 13.5%, crushing passive index funds. Swensen compares Yale's portfolio to a wild garden, not a manicured lawn. Each asset class is like a different plant species, thriving in varied soils and seasons. Just as biodiversity protects an ecosystem from pests or drought, this diversification buffers risks and smooths returns, making the entire portfolio resilient against market chaos. This approach requires fortress-level patience and guts. Instead of chasing hype, Swensen's team holds steady during inevitable market storms. The payoff: over 23 years, Yale's endowment grew by over $20 billion, more than any university fund ever. Swensen proved that disciplined, unflashy investing beats flashy short-term gambles every single time. Swensen's success doesn't come from flashy moves, but from trusting the right people and strategies. It's a quiet revolution where relationships trump quick wins and expertise defeats speculation. Swensen didn't just pick any fund managers. He hunted for advisors with deep expertise and integrity. Think of it like assembling a chess team where each player anticipates 4 moves ahead. For example, he partnered with top-tier private equity firms who had proven track records but weren't flaunting flashy ads or chasing spotlight. Imagine trying to catch lightning by chasing every tempting, shiny opportunity in the market. That's the opposite of trust. Swensen's principle is simple: trust able hands and proven processes over market noise. This builds a calm base where risk is managed intelligently, not avoided by paralysis or frenzy. In a world obsessed with quarterly earnings and instant gratification, Swensen's strategy feels radical: stay the course. Over decades, holding through crashes, bubbles, and busts, the long-term view didn't just preserve capital, it multiplied it beyond what most thought possible. Most investors think of risk as volatility, but Swensen teaches us to look deeper. True risk is losing purchasing power and chasing illusions, an eye-opening rethink of what danger really means in investing. Swensen famously argued that short-term price drops, the volatility everyone fears, aren't the true danger. The real threat is earning too little to keep up with inflation, which silently erodes your purchasing power year after year. It's like focusing on waves and missing the rising tide's slow but steady threat. Imagine inflation as a stealthy thief. Even if your investments don't lose nominal value, inflation steals what those dollars can buy tomorrow. Swensen's portfolio guards against this by including assets like natural resources and real estate, which tend to rise with inflation, ensuring your wealth doesn't just sit still but actually grows in real terms. Many believe active management is a gamble, but Swensen flips that narrative. Good active managers aren't gamblers, they're like skilled surfers navigating waves, reading market winds to avoid wipeouts, not chasing every big swell. This disciplined active approach further reduces risk by exploiting market inefficiencies others miss. Remember that chilly autumn morning when Swensen first faced the Yale endowment's uphill battle? His secret wasn't fancy trades but rewriting the playbook: a wild garden portfolio, trusted partners, and redefining risk. Next time markets buzz you to act fast or fear the dip, pause. Try this. Map your own portfolio's diversity. Are you really diversified or just mimicking the herd? That small step can change everything. Subscribe for more book summaries like this one.